Bob Network and our YouTube page. Friday, that means Phil Strebel, Chief Market Strategist of Blue Line Futures. Phil, right now I'm looking at a market that's been under pressure. Stocks red across the board. The dollar's been up. Yields have been pinned higher, and Bitcoin's up 4%. That's the thing that stands out to me the most.
Yeah, nice to see that big disconnect between Bitcoin and specifically the NASDAQ. Now, the NASDAQ is really under a lot of pressure, and what a lot of people aren't looking. Remember, when you're a commodities trader, you're really a detective of these markets, and you want to see that the Japanese yen was up 1% here today. The Bank of Japan governor is going to speak on Monday. There's concerns that they'll raise rates in either December or January. Their Q3 GDP was quite resilient. So what's happening here is that, remember the way the carry trade works. You borrow yen at a low rate, you buy dollars, you buy tech stocks. Well, if they're going to raise rates over in Japan, you want to unwind it. So they're selling the tech stocks, selling the dollar a bit. That's why I think the dollar's kind of just holding in here, just slightly positive, and then they're going to pay back those yen that they borrowed. So that's where much of the selling pressure came in the tech industry here today.
Interesting. The tech stuff down is a problem, right? Because it's the most important sector mathematically. But, NVIDIA next week, I mean, that's like, how far could we go until we hear from them?
Yeah, I don't think we're going to sell off too much more. I think that maybe Monday we start to capitulate there. I mean, it's amazing how a lot of these markets had reset. I mean, we just had so much go at these markets all at once. You got between China, you got Jerome Powell being hawkish, you got yields continuing to push up. That 2-year yield sitting right at about the 200-day moving average, 4.35%. So it's just been a very fluid investing landscape here. I think that most of the destruction in these markets has probably been done, and much of the repricing has been done. So we're just going to want to see how things really play out, from here to the end of the year. Typically, we start to kind of just, after this week of volatility, we start to just drift higher.
Bitcoin, you think, a sign for this degree of kind of animal spirits you're arguing, I think, are going to stick around, if I'm hearing you right? Because, I mean, BTC going into the weekend with the rally right now, I mean, that's pretty big because it could have easily gotten pulled back with all the other kind of Trump trades that fizzled the last 48 hours, and it didn't.
Totally should have been slammed here today. The fact that it didn't, it tells you that it's operating to its, its own beat to its own drum. So I really like it. The Ethereum contract did go negative, so it just shows you want to be long the leader in that market, specifically Bitcoin. But not really too many standouts. We had this big move from all the Chinese data that came out overnight, but a lot of that faded. Aluminum was the only one that really held strong. Gold, silver kind of giving back some of their gains. But I got to think if the Fed is going to maintain more of like a hawkish stance, that could also be partially weighing in on things like the Russell, and that could also kind of bring us back into this stagflation type of trade. So I think that gold futures, they were quite resilient today, and I think that they might continue to hold up and surprise people.
Yeah, let's talk gold, Phil, because it seemed like maybe stock selling was the cure to gold's week-long ails. Do you think risk off helps gold as like a safety bid right now?
It looks like it because of the fact, if you look at just the trajectory of that chart after the election on all of the U.S. equity markets and how they just were rolling over and tops were put in place, I think that breakdown occurs and someone's going to have to weigh in here. Like, do I want to go into Bitcoin at 93,000? I think I might have missed the boat. Or do I want to look at an asset class like gold, which has seen serious central bank buying, that historically the first month after the election, it starts to really recover. And then 3 months after the election, we saw gold in 2016 up about 5.5% to 6%. So it just makes sense to be a placeholder in people's accounts here for an asset class, given all the volatility in the equities and just missing the boat on crypto.
Yeah. All right. So you've got faith gold's going to be able to hold along for the ride. How about the other commodities with Chinese stocks getting sold again this week? Dollar going up. Should we mess with any of the more industrially linked commodities?
Copper holding a critical level support, $4, bounced off it yesterday. The silver market briefly dipped below $30. A lot of bargain hunters emerged there. It is weakening up a bit into the session here, but we'll see kind of a bull bear line and a pivot point right at that $30 level. Crude oil futures right back kind of at a support. So if you take that chart and you go out, it's kind of right at that, back at that narrow range. I think all the bearishness has been really factored in to the oil market where we stand right now. It's not to say once Trump takes office that it might see a little bit more pressure, but we think there's a lot of good opportunities in many of these commodities. You just got to be a little bit more selectful coming into the end of the year.
Okay, great stuff. Love it across the board. Appreciate it, Phil.
Take care, man.
Man knows his numbers on a lot of charts. Phil Striebel, Chief Market Strategist, Blue Line Futures.